Hi guys, welcome to the F.B.A.N stock review series. Today we are going to take a look at Alcoa stocks. We will be looking at three things. Number one, the stock performance of Alcoa. Number two, how the company is doing in terms of business. And number three, what we think is going to happen on the Alcoa stock price in the future. Now, as you can see, the stock performance of Alcoa has been okay in the beginning of the year. As you can see clearly in the chart that from February to March 2016 there was a huge growth, and from there on it kind of consolidated over the year. Alcoa has a lot of challenges with a weak commodities market. The aluminium price is very low at this moment. However, Alcoa has been cutting deeply in the cost and remained as a profitable, stable company this year. It is too bad that Alcoa didn't beat the expectation of the analysts, and it resulted in a downward spiral at the moment. So at the moment, for the stock, Alcoa is very in a bearish trend, and that is because of the bad earning results of the third quarter. Alcoa said last year that it would break the company in two pieces, meaning that Alcoa is separating the business into two companies. One company has the division that supply airplane stuff and car parts and service to the car parts and service to the airplane, and the other company is all about the traditional aluminium melting and refining operations. And this way, for both companies, the shareholders would get a higher return on their investment. Others, that is the strategy, the idea that they want to achieve. The plane and the car parts company, that will be called Arconic, and the other company that is smelting aluminium and refining division will be Alcoa Corporation. So this way you have two companies. Now, despite the split up of the company, it is still facing a lot of challenges, because if you look at the third quarter result, then you will see that at both divisions they had a decrease in revenue. However, the profits went up compared to that last year, but that is mainly because of the cost reduction. At this moment, it is for us very difficult to speculate on the stock price, because in 2 weeks Alcoa was split up in two companies, so it is almost impossible for us to speculate at the stock price at the moment. All we know for now is that the stock price is in a current bearish trend, and it is testing the support level of $26. So let's see in the coming days if the support levels remains intact. If the support levels get broken, then the stock price will go down further. Now, for the future of the company, it doesn't look bright at the moment, and that is because of the slowdown on the worldwide economic growth. Every country at the moment is facing some economic challenges. If you look at China, the economy is growing slowly than before, and the United States economy is not growing really well, and the same goes for the European economy and the rest of the world. And for the commodities markets, at the moment we don't expect any fashionable or spectacular growth at this moment, especially not for aluminium prices. That's all because of there's not much of a demand right now at this moment. So we think that Alcoa will still face some really tough times, but they are well prepared because the cost reduction they have done really a great job at reducing the cost. And we think that around the second half of 2017 or otherwise early 2018 that the commodity markets will start to recovering, and Alcoa is very well positioned for that recovery. So until then, I don't think that we are going to invest or trade in Alcoa stocks yet at the moment. Thank you for watching this video. I hope you guys enjoyed. If you want to watch more of these kinds of videos, then please subscribe to our channel. We would appreciate that very much. Thank you and have a good trade.